All right. Good evening, good morning, good afternoon, wherever you are on this beautiful, beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partners, Mr. Ryan Carthage and Casey Jackson. So we are definitely happy and grateful for all of you being here with us this evening as we close out another week, right? Busy, busy day in the markets in regards to fundamentals, some things we were looking forward to. So we want to make sure we get those covered tonight. Without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper for notes, and let's make sure that we participate and engage. And if everybody can hear me loud and clear, I believe, yep, the chat is active. Do me a favor, drop me a big one in the chat, and we can get things going for tonight's session. All right, awesome. So everything is working. Okay, so Casey, good evening. How are you?
I'm good, Benny. How are you tonight?
I'm doing great. Doing great. Glad you're doing all right. Let me ask you a question. Is this you in here as host too? You're in here as the host as well? It's like I've got you as a host, but then there's another one that says host.
No, that's not me.
Oh.
I'm under my personal account.
Into your personal? Okay.
Yeah.
I don't know. We'll figure it out. Hold on one second. We got Reese coming in. Host, who's the host?
I think you have me as host.
I have you as host. I have you as a
Who
host.
is me?
That's a Ray.
That's all right.
Oh,
Remember rename? I don't know how that even came through. I don't know. Anyway, we know who it is, so that's fine.
That's okay.
Yeah, because sometimes one of us, I thought it was Ryan at first, but he said it wasn't him. He hadn't logged in yet. But every once in a while, one of us will forget to sign out. So it'll come up as host. So I don't know what's going on, but that's all good. So let's get it moving. And we are all set. So let me get out of this screen. Let's come over, take a look at the Forex Factory first. And we all saw the news. So before I say that, I sent out the message in Telegram today, like, hey, I am looking to close out a lot of positions, adjust stops on some of my positions that were in profit, took some money off the table, because a lot of the reports I was reading late last night into the early morning, it was just a complete mixed bag. Like it was all over the place. I just think these are just unprecedented times with so much stuff going on. We've discussed that ad nauseum, but don't want to spend too much time on that. But when you come through and you look today at what happened to advanced GDP, it missed, right? So it's all over the place. You go to U.S. trading economics, U.S. economy expectantly contracts in Q2. So it says U.S. economy shrank 0.9% in Q2 compared to the market expectations of 0.5% growth, and surging inflation, interest rate hikes, and continued supply chain pressures weighed on consumers and businesses. That marked a second straight quarterly decline in GDP, which is a common definition of recession. Back in the day, that was the definition. Now it's just a common definition. President says we're not in a recession. People who are bears in the market says we are in a recession. It's crazy. So you know what I do when that happens? I just go to the technicals and let the charts figure it out. So yeah, it's a mixed bag. It was kind of all over the place today, but it is what it is. Everything falls within the Fibonacci sequence. So we will take a look at that. Japan industrial output growth hits a record high, right? So that's at a record high. The stocks rise for the second session in Canada. We saw the stocks rally here, and the main reason it rallies is because they're looking at the fact that hey, because right, it missed and it shows a slowing. So now the stock market gets a little happy and gets a boost because they're thinking, hey, the Feds might not be so aggressive going forward. So economic wobble boosts Fed's easing bets. Okay, but here's the article that I'm really paying attention to because I'm kind of falling along the same lines, if it ever decides to load, fall along the same lines as this article. So I'm going to copy this so we can share it as well. But it was a pretty good outlook. So it says it won't be long until the dollar shakes off its post-Federal Reserve slumber as calls on dovish Fed pivot are too early and weakening in the global in the global economy will continue to sour sentiment on risk assets. So right here it says, looking at the coming weeks, our view is that the post FOMC dollar weakness, which is what we're experiencing right now, may start to fade quite soon. Right. So I think, emotions start to soar. People start placing their bets that the Feds are gonna start to pivot a little bit. But inflation is still high. Inflation is still high. So what they're saying is it's denial. I think so too. I think so too. I definitely think it is. So you're seeing some things rally now, but I'm like, I don't know about that. So there's the little article there. So like I say, roll over, take a look at the technicals. You can see here on investing.com too that gold jumps 1.8%, biggest rally since March, as what does it say? All types of headlines, right? Shock value. Okay. As US enters a recession. Okay. Big headlines. See, the beautiful thing is when you learn to become a technical trader and you learn how to follow this stuff, is you kind of know what the real deal is. So that's a big shocking thing. 1.8%, biggest rally since March as US enters a recession. But if we go and we take a look at gold, okay, for our gold traders, we call that, well, that's just an 80-20. That's what it is. That's an 80-20. That's been set up there for quite some time for us, right? Trading gold. Here was an ABCD completion. A, B, C, D. D extension got a hit. We got a new AB boundary, right? Shallow correction, less than a 382. Price dropped off, came into the 118, 127 zone with strong monthly support, and we got a rally. So technically, before this article was written, okay, the big news print was written, technically, we were already, right, set up for a potential reversal back topside for gold. So it's just like what comes first, the chicken or the egg, right? So this is the good thing about understanding technicals. And it's amazing to me how way back when, and still some old school people, they think technical analysis is like voodoo or something, right? It's not real, right? It's all about the fundamentals, but it's actually a combination of both. So there's your reversal on gold. That's quite a big move for gold, right? 1.8%. That can make you some money, right? Depending on what you're trading at. Gold, I thought it was going to drop. Thought it was going to drop. That's all right. That's all right. It's weird sometimes. The reaction is just crazy. That's why I decided to cut out a lot of things today and just stay neutral. Except for on those, the yen crosses are mainly the ones that I decided to make some adjustments to, but didn't close them out all the way. Ryan had been eyeballing those for quite some time, and they are paying huge dividends. So Joyce said it missed your order. That's all right. Another trade right around the corner. So let's go up and take a look at the DXY as we see, right? We've been watching that level and we see that it finally broke through that level. Okay. So now we'll just continue to monitor because it just broke back through a major level, major zone. So the question is how far does it want to push down before it decides to make a correction and retest that level? So we'll see. We will see moving forward. But as we dive into the charts, we'll look at some things. So we'll look at some of these dollar pairs. But one of the things that I want to, good evening to everybody that just joined us. Let me make sure you guys have control of your microphone. I want to, because we got some questions about this morning in Ryan's session about scalping, and he explained that very well on how you can use the Fibonacci sequence. And we also had some questions outside of the sessions about, how we were looking at the break and retest and how it falls in line with what we do. So I definitely want to spend a little time with that on tonight. Is that okay? Drop me a one in the chat if that's cool. If we revisit that a little bit since we had some questions. Okay, awesome. Right, there seemed to be a lot of interest in that. So want to go back over that, show you guys some really cool things, right, in this market, because it kind of plays into what we've said multiple times, right? That if you only learn how to properly do top-down analysis in regards to understanding how to properly draw your support and resistance, how to eyeball those swing highs and swing lows in the market, if that's all you ever learn from us, you can make yourself some money. That's outside of the Fibonacci sequence that helps you project those targets and those long-term targets and things like that. So we're going to take a look at that because it kind of all ties together. So we might as well bring it full circle. And I'm glad you guys don't mind, at least, right? Seems to be the consensus. So let's go take a look at something like this Aussie dollar that we've been looking at, because this is a good example to use for levels. Okay, because as it continues to just climb, right? It's just climbing. That's the daily look at it. Okay, that's the daily look. It just continues to push up. Okay, it's getting to the top of that zone. Maybe it'll make the U-turn before, maybe not. Right? You see how it broke topside in our X pattern, right? We went over that last week with the diagram and the chart. So it's continuing to push up in the zone. So what I want to do is I want to take a look at something like this. And we can see how our down AB boundary, right? And we'll go up to the daily and show you guys some things too here in a second. But we've been pushing down, right? That's a no-brainer. This is the Aussie dollar. Dollar's been strong. Overall, it's been pushing down. Right now, it's making a huge correction top side, right? May head back to that B boundary, might not, but it's still within our sell zone. Okay, so it continues to ride and hug that trend line. But let's take this out for a little while as we look at the breaks and retests and exactly what we're talking about. And this is in your training too, in the back office, right? How to identify these things. So if we say, okay, well, we've identified our AB boundary, we've got a shallow retracement, we got an 80-20. How do I look to trade these type of things on breaks and retests? Okay, so we're just going to clear this out like this. So we've identified, hey, I've got an 80-20 and I want to trade that back to the upside. Okay, because pretty much would be the same thing if it reverses too. So this is a good one. And we've talked about it before, right? About how price likes to climb the stairs. Okay, so if none of this upside existed yet, okay, and I know I'm in an 80-20 zone, I've got some support, how do I play that? Okay, with the break and the retest. Well, we teach you in the very beginning to focus on those swing highs and those swing lows. And you can see them right here. See here, see there, okay? Those become your levels and your zones to identify as support and resistance. And as these ABCD waves occur, they are always working to create new levels of support and resistance. Everybody see that? Drop me a 2 in the chat. Let me know that you guys are with me tonight. It's been a long week. Awesome. Okay. So we've got that. And that's the, the spatial intelligence piece that we talk about all the time. Okay. Just seeing that. All right. And having that fib on there can kind of help us through all of our levels of support and resistance that are happening. Which one that can give us extra confluence on which one may actually hold. Okay. So let's take this back off. Probably not going to let me. Hold on 1 second, everybody, because I brought it back. Oh, got to reset my chart. Okay. So back to our 4 hour. I'm going to pull this off and take this off here. You see that. Okay. So I'm here at the low. We form the swing low and we're starting to push up. So now if you just look at this chart, you can see where our levels are like this. Bang. So whereas when I put the fib on, I say, you know what? I want to trade right back to the 382 or to the 61.8 or whatnot. You can also look at the market like this, and this is what we mean. Okay. So this was our swing high. Okay. Here's our low of U-turn. This is our swing high. Okay. Can everybody see, right? Drop me a 3 in the chat. Can everybody see where price pushed through this level, that swing high, pushed through this level here, and then it came right back to retest that level. Everybody see that? Awesome. Okay. There we go. So look, and this is price action 101 fundamentals, right? And I draw lines just because I like to keep my charts clean. I know that in reality, it's a zone, right? It's a zone where price, right, can react, okay, can hold and react. So that's past resistance becoming future support, okay? Now look, here's another zone, okay? That's your swing high, okay? But when you look at wick to body, right, somewhat in that zone, you see how price broke through, okay? And this is what I mean for our newbies as a zone, okay, like that, okay? But I use lines because your charts can get kind of cluttered, all right, once you start doing it like this. But you guys see how it broke this level. Look how it acted as past support, becoming future resistance. Now it became future support again. Okay. So we got that. See? And you see how it broke through this level, pushed through. Sometimes it gets impulsive and it wants to go through a few at a time, depending on how much the buying pressure is there. But look at your levels and how it keeps smashing them. This is what we mean by scoring a point and pulling back. See how it comes back to the zones? All right. Now look. See? That pretty cool? Drop me a 4 in the chat. I think it is. I think it's amazing. It's a pattern-driven market. Okay. So that's how you can see this, right? So this is what we mean by spatial intelligence. Sometimes you just have to take everything off the chart and just look at the chart. Okay. See how it just pushed through? Okay. See how it just pushed through that zone? It's pushing through and it's stalling a bit. Okay. And then we see the next levels here, right? But because of the pullback, you see how it forms the new high, right? That is pushing through. So it's giving you another level now in the near term. See? See that? So we break and maybe we come back and then we push that level, right? And then we know we're out of the zone there. So if I scroll out, I think it's the next level down for this fib. Yeah. See? Okay. So you see how you can use, right? See, we always say how it's just, is price action. We just put the tuxedo on it with the fib and we measure, right? And we look for some targets depending on directional bias. Now, okay, if this is going to hold and U-turn in our zone, okay, so we got that. And this is what we call, right, that staircase, right? So look here. This is so important. Like sometimes people they glance over this lesson. It's a simple lesson, but it's really the most important lesson. Okay. See how when it breaks through, that's your staircase. See? That's why we say it's like going up a flight of stairs, like so. Okay. Take our time to cover this tonight. You just got to see it. And we teach it like this because everybody has the power within themselves to do this on their own, to become a consistently profitable trader. So you don't have to rely on trade signals or crazy indicators. And if you do use indicators, it's fine, but we know they're lagging. So it doesn't have to be, once you develop the skill set, those indicators just complement what you do. It's not what you do. It's not what you're solely dependent on, okay? Because they can be good for confluence, all right? The reason why I call them crazy is when people try to use them as the primary be all and end all. Like I get ads all the time in emails. This such and such indicator does this, does that. No, right? You don't have to do that. See how you're going up the flight of stairs? See how price scores a point and pulls back, right? That's all we always relate that to basketball. And how price, like when you score, the team scores a point and then they run back down the court. They pull back, all right? Score a point and pulling back. Now, when price is ready to make the U-turn. When price is ready to make that U-turn, you all see it. You all see it. You can see it. Look, that's why the smart support and resistance draws it up like this. Okay. See, this is all the market does. Okay. So when this market wants to U-turn, and we prefer that it does it within our zone, it's going to smash down and come back to the zone that it broke. And if it holds that zone, we know that it's going to give us that 5 candle combination, 2 to the left, 2 to the right. Okay. If it holds the zone, that's what it's going to do. And then it has a chance to pull down. Boom. Okay. Break the level and pull back into the zone to test it. And if it forms a swing high, it's going to go again, right? That's what we look for. So now, all we're doing is look. We come down the flight of stairs. See that? Okay. So now that's your flight. Boom, 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 right? So this becomes, right? See that? Your S1, your S2, your S3. That's what it's doing. That's what we're looking at. So take a look at that. Look what price is doing. And it's all based off of your swing highs and your swing lows, because from that, in the downtrend, you're going to get lower lows and lower highs, higher highs and higher lows. Okay, that's what we're looking at. And we do top-down analysis to identify those key levels. Right? This is a daily level. That's a weekly level. Okay. See that? Questions? No, no questions.
Don't look like it, bro.
All right, appreciate it. Okay, so spend the time. That's why the first thing that we do is we mark support and resistance from the top down. Okay, from the top down. So if the fibs are necessarily your thing that you want to hold for those targets, and you say, well, I want shorter term targets, then you can play, right? Price breaks. Now I'm just running everything tighter. Okay. I'm running everything tighter. Okay. Boom. I'm putting my stop below there. And I'm running everything tight. It brought me to the point of U-turn, the fib, and now I'm just waiting for price to react and move in my favor. All right, that's it. That's the thing. So if we come to something like the NZD USD, and make sure you guys stop me if I'm moving too fast now. So we said, hey, all right, looks like the way this is moving, because we came into a daily, this might have been 2 weeks ago now, but we came into a daily D extension. Okay. Let me find my little tool. A, B, C, D. Okay. We came into an ABCD wave. Boom, we completed. Our C becomes our new A, our D becomes our new B. Got it. Okay. Hit the target. But when we marked up from the daily, this D extension, and brought it down, we said, you know what? Yeah, we came right in at this 382 on this pullback on this 4-hour fib. Yep, we got a 382 on that. So technically, the 80-20 is out, except for higher time frames control the lower time frames. And we hit a daily D extension, which fell right in between that 118 and 127 zone. We said, don't be surprised if you get a reaction and price starts to move back up, right? That's before we know anything that's going on fundamentally, right? That would necessarily cause that New Zealand currency or that dollar to weaken, okay, against the New Zealand currency. We said that's a highly probable reaction zone there, okay? And now that's moved up off that extension, right? Close to 200 pips. Okay? But if you clear everything out, right? I'm gonna clear this out. And we've got the point of U-turn. You guys can see the same thing going on. Right? Look. Boom. Okay. We pushed up against this daily level from the higher time frame. That's why we bring them down, pull back. Okay. So look at the zone that it created. Okay. Look. See how it smashed? It went sideways, consolidated, but you see how it's moving up and testing levels. Here we are at another daily level now, okay, that we brought down. But look, okay. So if I'm breaking and I'm retesting as a trader, and this is on the 4. Right? This is what I'm looking at. These are the zones that I'm looking at. That's falling in line. That's a 4-hour line with the daily right there. Okay. And then it just continues to climb. So there's more than one way to skin a cat. If you don't have that tolerance for the potential for this price to continue to move up, and you just want to go zone to zone, or wait for a break and retest and put yourself, say, in a 2-to-1, mark out a 2-to-1, 3-to-1, whatever you want to do, you can do that. Okay, everybody follow me on that. Drop me a 4 in the chat. Wanted to make sure that we got that covered. So the key is, right, is we like to find, right, in the methodology overall, those high probability U-turn points. So we use price action, support and resistance, and we use fib levels. Okay, that's what we do. Okay. Simple concept once you get it, once it all comes together. So if we go up and we look at something like show you guys something from the higher time frame. Okay. We're looking at like just the power in your swing highs and your swing lows. Okay. And being able to identify it and mark your levels. Okay. So oftentimes when price is hitting that 80-20 zone, okay, it's telling you something. Something's going on those higher time frames. When you got that 4-hour 80-20, that 1-hour 80-20, it's telling you something. When price makes that shallow retracement and it pushes down to that level. And oftentimes you're starting to get a swing high or a swing low to form, okay, at those higher time frame levels. Okay, so just spend some time with me right tonight. Look at what's happening. This double bottom pretty much, but look at what's happening when, look, here's your center candle low, 2 to the left, 2 to the right. You see how price took off, right? Everybody see that? So when we're showing you how to identify these things with the fibs and those 80-20s down on the lower time frame, oftentimes that's giving you the signal, right? Now, we know that 80-20 is occurring sooner on a 4-hour or the 1-hour than the swing low or the swing high is occurring on the daily or the weekly. Why? Because it's a lower time frame. So it's starting to build that formation, right? Because people ask that all the time, like, well, it's an 80-20. What's the reasoning? What's the methodology behind it, right? It's not voodoo or anything. It's just a point, right? It's just the kind of like that area in the chart. And if you go to your higher time frame, you see things starting to stall a little bit, right? And then look. So eventually, I was laughing, talking to Ryan today, like eventually I'll be super old school and all I'm gonna do is sit on this daily time frame and just wait. Because it seems like as traders evolve through all their years, the time frame gets higher and higher and higher and higher, right? After they lose enough hair on those lower time frames, they're just like, you know what? I just swing trade now. I used to be with a firm, or I used to do this, and we used to day trade, be at my computer 8 hours a day. Now I just swing trade, right? And I'm hardly taking any entries. They're just in it for the swing. So you can see here where you've got that swing low, and then look at that push, right? So here's your second, here's your close. Look at that push. It's 100 pips, right? It's 100 pips. Look at your zones, okay? So remember I told you, right? Even if the only thing you ever learn is how to market support resistance and recognize, right? Your U-turns. Look at this zone. There's a swing high, 2 to the left, 2 to the right. You see that? You see that? That's just good price action trading. Now, we drop a fib on, and that puts you in that long-term short, right? Where price is just moving down, and you can project like, this price is about to drop 1,000 pips. This is about to drop 400 pips. But, right, if that's not your thing, okay, we try to teach you everything that we know, okay? And then you run with it. So look here. I got my zone marked. Look at the level, right? Look at the level. This one here broke through. That would have been a loser if you try to get long on that in that zone. All right, you would have lost on that, but you don't win every trade. But look at the levels. Okay, see your two bulls here, your two bulls and your two bears. See how that price is dropping off. Okay, get your guys straight. Look when those swing highs and those swing lows form, how those moves take place on your chart. Okay. And this is past, right? So none of that existed. None of that existed. But at one point, that was a level of what? Support. And price pushed up. See the swings? See the price swings? They don't occur without the swing high or the swing low. That's why we harp on it so much. See the push? Okay. Spend time looking at the price action. Okay. I could drop my fib, right? And I can see, it can aid me in identifying. See, look, see that 80-20? Gave me the extra confluence. Oh, well, there's a lot of support and resistance levels, but this is key. Look at my zone. See? See that? See that double bottomed at that B boundary? Took off. Okay. Once you get your basics down, once you get your chart reps in, and understand how to properly mark up your chart, understanding what you're seeing, the market will talk to you. They say candlestick, sign language of the Forex market, right? But look, see how that came back to that past level? Hell, look at that. Okay. Questions? Somebody talk to me. Casey, what you got? Ryan, anybody? Don't leave me out here on the island all by myself, y'all, tonight. It's a big group.
Man, it's a great breakdown. It's a great breakdown. And it really, the thing that I think trips a lot of people up is believing that this has to be super complex.
Correct.
And it's not. Like you say all the time, is the market is primitive.
Right.
It does these things. So this is a phenomenal breakdown to really help people come to the realization that all the other stuff that you may see elsewhere doesn't exactly make sense all the time, because it doesn't have to be as complex as when the ketchup crosses the mustard and then you get two more candles
In the
up
water.
and down into the right. Yeah, in
the water.
Right? It don't have to be that. Right? It's primitive. So great breakdown, bro.
Yeah, appreciate it.
I used to think that, once you have the fib and the thing, so price would move really fast. So having watching it like recently more, you realize that it just will take time. You don't necessarily, so that was different for me from when I started a year ago. Like, wow, it really takes it time to like get there.
Oh yeah, absolutely. And I was the same way. And we have to realize too, right? Like, man, you gotta give it time, because in essence, we're trading fractions of pennies. That's what you're doing in the market. A pip, you're trading 1/100th of a penny. Think about that. And you're applying leverage to it. So it takes time. It takes time. So that's a great observation.
I got 2 cents, Benny.
What's up?
So I sat here and I want to say every other week I am revamping my trading plan. And the reason being is because I see something different every time. So then that way I'm not putting caveats. But what I am also doing, I'm going back watching the videos to where I'm getting my aha moment. So like what I'm doing now, like I use TradingView, but in order for me, I'm a copycat. I have to follow you. And so I'm on Smart Trader. So now what I did was I had all these workstations open, this, and I felt myself scrambling if I'm trying to scalp for the day. And I'm like, oh, I know how I can do this. I can just put it on one station and have my little, I actually got 5 open. I got 5 charts open and I'm switching in between them. But what I'm going to do is I'm going to end up creating a workstation for the trades that I got open. So then that way I got 2 charts marked up. And then that way I can go to it quick enough, because I work at home and people like, well, you should be in the money. Well, no, I'm a claim analysis. And so I have a big learning curve because I'm training at my job and I'm training here. So I literally have to write things over and over and over again, just so it can get embedded in my mind. And today I'm like, okay, I have to find a way. My thing now is to find a way to be consistent. And I think it's the consistency. It ain't the fib. It's not the support and resistance. It's the consistency of what I'm going to do when I'm looking at this chart. Am I taking my time looking at this chart? So I literally got a spreadsheet to where I literally got the COT report. I got the technical summary of what it is for the day. Is the monthly, is it in the long, is it in the AB range, is it a BC range, or is it a CD range? I'm literally doing this, and I know it's kind of like more analytical, but that's what I do as a job. I'm an analyst. And the first time I did this, which I posted in the Facebook group, I did good that week. In the second week, I was half-ass and I got half-ass results. So it's like, I had a plan. I got to find a way to stick to it. And I jumped on my charts as soon as I got off work today, because I figured as long as I get my charts ready for Saturday, then I won't be such in a rush to try to follow along Saturday and try to hurry up and get everything done Friday night, Saturday, or Saturday, Sunday morning, because I think that'll take on my psyche. That'll give me that time management that I need. So then that way I'm not trying to, oh, it's Tuesday, oh, it's Monday, because Mondays lately been moving. Back in the day, Mondays didn't move. Lately, Mondays is moving, and I'm missing the setups. And I'm like, I can't catch a break, but it's me not giving that break, but not having that consistency.
Correct. And you know what? It could be, when you learn it, it could be a little erratic like that. Like Ryan always say, give yourself some grace, because what you're doing is you're trying to fine tune and refine, your trade plan. You're trying to refine it. You're constantly executing, looking at the results and refining it. And that's why we always say, like, it takes time. Like this whole thing, when you see on YouTube, like, oh, I did this in 6 months, a year, like that stuff is a myth. That's a myth. Like, it has to, for you to get consistently profitable, not just lucky every now and again, it's gonna take time to develop that consistent process. And that, kudos to you for really working hard to get to that point and recognizing, like, this is where I need to improve. But it's hard for you to come to that conclusion if you're not consistent. First, you have to consistently put in the work to then one day become consistent. So that's awesome feedback, and definitely proud of you and everybody that's putting in that work to get this thing down, because it's ultimately your journey, is your psychology, and we're gonna give you the nuts and bolts to this thing, and then you're gonna have to put the work in to find that sweet spot that fits you for your lifestyle, your psychology, your comfort zone, and all of that, right? Your level of risk that you like to take, all of that. So good job on that. Ryan, Casey, anything to add to that?
No, nothing to add.
Yeah, I think Joyce said
Great work.
Joyce said a lot. Yeah.
For sure. That's it. It's still the same thing. So we will spend some time, right, on some of our rituals. And Casey, Ryan, you guys let me know what you think about this, where I want to take people back to, like, because sometimes you get we dress it up with the fib. Sometimes you get so comfortable with that, but you want to master the price action too, right? And being able to see right? Key levels and key zones, right? So we see this coming up into this zone. It's important to see that. It's important to see that that's coming up in the zone. So if this forms, right, which is what we've been looking at, this Aussie CAD. See that, how that's moving, right? We know this, we know this part, but when this area here, look at this on your daily, okay? Right, look at that and where it's coming into. So this eventually wants to form a swing high here, right? I prefer when it forms these highs that I get this type of look, right? Not just small candles that's not making any type of decision. But when you get these looks here, right? See those two bulls and two bears there? If you see that, if that forms, so for example, if this closes out, technically, you're gonna have, we're in a new day, so this is Friday already. You're gonna have, this is gonna give you a new level of resistance. Like so. Okay. It's time to put all the building blocks together now. Okay, so we can see across here, look, okay, that's an area. So what I would love to see, I would love to see a greater reaction to the downside. You can see there's a tussle going on. That finished neutral pretty much for the day. That did absolutely nothing really. But if we can get that to form that swing high, okay, now I'm looking for some downside pressure there. And if we get it, then we look to move to the downside. Okay, place your stop and look to get to the downside, get going. But you can see how it's telling you something here, right? On your smaller time frames, it's building, right? It's building, okay? Starting to build itself up. See something, right? See how it's starting to build in that zone? It's trying to tell us something. Right? So just identifying those levels, see, and those zones. So I want to spend a lot more time on this piece here, right? So everybody really gains a true understanding of what this market is all about, right? It's moving in waves, but look at the power, right? What's really forming those, supporting those resistance levels? What does it mean? How can I identify and play off of that? Okay. So questions, anybody? No?
Makes complete sense to everybody.
Yeah, I think maybe they're just taking notes.
I take it.
It's all
Nah,
good.
it's just having to process all of it, right? It's just like it's a lot to process and trying to get familiar with everything. And for me, patience is like making sure, learning my rules and what my trading style is. So the more you add and add on to it, it's okay, I got to process this. That's why I'm glad it's recording.
Gotcha. Appreciate it. All right. So just want people to see it, right? Clean, right? Identify, right? That's when I was getting taught how to trade, they used to make it just stare at your charts, draw your support and resistance, see what the price action is doing, right? Then you could dress it up, right? Because that's giving me my long-term targets, right? Or giving me that fib level to where, oh, okay, I got 5 or 6 levels. Which level could really give me a good shot of making that U-turn and reversing and moving down to the downside, right? So that's why when you see that, these swings, right? Those swings coming into this zone. You see that came into that zone with good confluence with that weekly level, right? And we got that reaction there, that nice reaction. That's how you pull it all. That's how you pull it all together. All together. Okay. So when we look at things like how ones that we let run today to see, right? So we know, see how we came into this zone here. That gave us the confluence, but just from a pure technical perspective, okay. Look at us, we came into the zone. It's trying to break back below it. That's gonna give me at the end of the tomorrow, that's gonna give me a new swing high, right? A new swing high. So look here, we come to the daily. See how that created that daily resistance level there? Right? With look, that's my extra confluence. But look at the level. Right? See how I tested it, broke it. It's gonna pull back, probably try to test that zone. But now look at how that translates to your lower time frames. See, there it was. See? So off the high, okay, it's down 500 pips. Off your break, 370. Identifying those levels. That's why we do it from the top down. Okay. That's why we do it that way. Very important, right? Look at your CAD yen. See? See that on your weekly? Starting to form. But you see how it's already doing it, right? The next time frame down, the next chart down. Just let me know something. That's an 80-20. I didn't get a 382. Right? So now it's just a matter of which level, right? We're gonna form it. Look, it dropped here. That there, right? It's 300 pips. Okay. This coming out of the zone now, right? It's down over 100 pips. A lot of power in that. A lot of power. Look at when it came down and it tested. This created a bull flag. But look at when it tested the zone and formed your level. Right? Formed your levels and took off. Okay. Right. Look, how that's holding. Okay. Your fibs are gonna help give you that target. So yeah, I see all these support levels, but where could this ultimately end up? All right, well, this 382 on this fib after this shallow retracement, that 382 is 600 pips away. I've got 600 pips of potential downside on that trade, for example. Okay. Any questions?
Benny, how
Yes.
I guess I know we see this stuff and we know it, right? But how big is your belief has to be in order to really experience that it does it? Like I know when we do the markups on the weekends and stuff like that, you know, we draw the fibs and you see complete. But in terms of, I mean, I know for me, but I'm just trying to share in terms of belief that it's gonna go. How does that play into your psychology?
Man, it's huge, right? Because belief is part of your psychology. The belief factor. And the only way you build it, there's no way around it, is to do it. You have to jump and grow your wings on the way down. That's why we tell you, right, the power of trading small, right? So either in your demo or trading small and scaling into your trades, because you want to give yourself the time to build it, but you don't want to blow your account in the process of it, right? Even if you're in demo, right? You want to trade responsibly, but it's diving in, doing it, and giving it your time is time. Repetition is the mother of all skill. It has to be belief. You have to have a strong conviction. But then you also, on top of the belief, you have to be a good loser too. You have to be comfortable with this 1/4%, this 0.5% is going to represent $25, $50 to my account. You have to get comfortable with losing. It is a totally different ballgame because most people don't like to lose. It's all about winning. But this is one of those games like baseball where you don't have to be right the majority of the time to make money. And then you have to realize, right, that you don't control anything. The only thing that you control is your risk. Your risk and the time you spend on the chart so you can find those areas of high probability. But other than that, you don't control anything. One of our mentors always say, like, look, all you can do, right, is do your best analysis. But once you click that button, all you can do is pray. That's it. That's the game. So if you're a control freak, it might be a problem for you, especially in the beginning, until you get your head wrapped around that. People don't like to lose, and they feel like they have to be in control. They feel like they have to be right all the time, and that is a killer when it comes to trading.
That's
Is
good.
that.
The only thing you can control is your risk. I like that. That was good.
Yeah, that's it. That's why we harp on it so much. The only thing you can do is control your risk at the end of the day. All right. I know. So think about it. If you take your risk and you divide it by your stop loss, that stop loss could be, think about how that's the one constant. That stop loss can be 200 pips, 100 pips, 20 pips, 30 pips. If you divide that stop loss by your risk, if that risk at 1% is $100, the only thing you're ever going to lose is $100. But your gain, right? It could be a 1-to-1, 2-to-1, 3-to-1, 4-to-1. Oh, I use a trailing stop. And as long as it doesn't hit my trailing stop, I'm not even going to put a take profit. I'm going to let it run in the direction. I'm going to use a trailing stop. And as long as it doesn't hit that trailing stop, that can end up a 15-to-1, 10-to-1. But no matter what, 1% is 1%. Because dividing that 1% by your stop loss is going to shrink it's either going to increase your lot size or shrink your lot size, depending on how small or large the stop loss is. But if you lose the trade, it's still going to be 1%. At 1%, I got 100 swings at the plate. I got 100 swings. And if I'm in a 3-to-1 setup, if I do my best to put myself in those type of setups at 3-to-1, I only have to win 30 out of 100 trades to make money. There's not too many professions that you could be wrong in. Maybe the weather, baseball, right? Weather even has a better win percentage these days with the technology, but that's the game. You can control that. So if you want to put the house on the trade, and that's 15%, 10%, 5%, you control that. You have to be comfortable with that. And if you lose that 5% in one trade, which tells me I got 20 trades, I lose 20 trades in a row, I'm done. If you want to put 10% on the trade and give yourself 10 cracks at it in this market, you control that 100%. It's not strategy, it's not this, it's not that. You put yourself in a position to be 10 trades and out. You did that. Don't blame it on strategy. Especially if you know going in, hey, this strategy has a 30% strike rate, 40% strike rate. Like, you want to put 10% on that? You want to do the feel good trade? Go for the Hail Mary? You control that. And that's the game. And that's the hardest thing for people to learn. They don't, first and foremost, look to preserve their capital because they always start, especially when they're new, they always start out with the big dollar sign eyes and come to the conclusion that all I'm concerned about is how much can I win? when the first thing in trading is capital preservation. How much can I afford to lose? Once you do a 180 with the mindset, you become a lot more comfortable. Oh, that trade's in my zone. Oh, I see the swing high at that level. Boom, I'm in. I check it again in the morning. I check it again later in the afternoon. 2 days later on a larger swing. I'm looking for the next setup. That trade's going to do what it's going to do. But I know I'm not going to lose 100 trades in a row. It's not.
I think the other thing to that, Benny, and you touched on it a couple of times, but the deliberate practice, right? And when I say deliberate practice, I mean literally forcing yourself to follow the rules. Because if you manage your risk, but you're just taking any kind of trade,
Correct.
you're going to lose that 20 trades real quick.
Mm-hmm.
Right? So really, really working to force yourself to be deliberate in your actions. And more times than not, because you won't ever be perfect. You're still going to have those impulses, but really working to discipline yourself for the deliberate practice of following the rules. Because if you're taking these trades, man, and you say, oh, I'm only going to trade 80-20s, but you got a 618 retracement and you're taking a trade at the 118, 127, that's not following the rules. Or if you feel like you're going to miss out on something and you just jump in without your confirmations being met, high probability you lose that trade. And you won't understand why, and you'll go back and say, oh, well, this just doesn't work. And it's not exactly true, because you haven't actually followed the rules to be able to identify whether it works or not. Right? So being deliberate in the practice. And then the other thing of going back and back testing. That's why Benny and I, we went back a year and looked at all the fibs on a 1 hour time frame. So to be able to see it over and over and over and over again, right? Walk through the process of each one of those fibs, one at a time, to be able to see it. This is what it looks like. This is what it looks like. This is what it looks like when it doesn't go in our favor, right? Because like I said, you don't control any of it, but probability is what we're working with, right? So this is what it looks like when it does go in my favor. This is what it looks like when it doesn't go in my favor. And then again, in that deliberate practice, paying attention to how you feel. How do you feel when you're in drawdown? How do you feel when you take a loss? How do you feel when the trade moves in your favor? How do you feel when you close the trade? How do you feel when you're marking up your charts? Right? All of those details are important to understand the process that you go through mentally and physiologically, so you can better then control and understand your thought process and your mindset.
Yep. Absolutely. All right. And I'm glad you said that. Being deliberate is important. Like you said, if I'm only going to take 80-20s, I'm not losing 10, 15 of these in a row. I'm not. But if I'm not sticking to my rules, like Ryan said, I'm probably going to get blown up. I'm probably going to get to that point. But if I'm being patient and I'm waiting, which means I might have a week where my setup is just not there. That means you don't trade. This is not making money, waking up to the alarm clock every day, being at work by 9 a.m., working till 5, get paid every 2 weeks. But I got to be working every day to make sure that I make money. Right? You might take 1 or 2 positions over the next 2 weeks, 3 weeks, and you can make a lot of money because you were disciplined and, like Ryan said, being deliberate and waiting for your setups and following your rules. That was another thing for me, right? That took me a long time. That's why I mentioned it. Like, I felt like, man, The only way I've made money all my life is that I had to be constantly working to make money. This is not that. It's not that. Okay. So great questions.
I can definitely say though that I've built in like an hour after like we go through stuff with you guys or looking at your trade setup just to like go back and study and also review what's happening is helped me. It slowed me down for once because I was kind of like feeling like I'm rushing, but it also gets me mentally into really looking at what you're doing overall, you know.
Absolutely.
So putting in that extra hour every day has been like eye-opening.
Awesome feedback. And we want this to be one big mastermind, right? You're gonna spot some things that we haven't even thought about, right? That's how amazing these markets are. You may develop something that you see a pattern or a tendency based on what you've learned, and we're like, you know what? I really like this. This is my move right here. That's it. But the only way you discover it is to put the work in, just like you're talking about. That's it. That's it. What other questions do we have? I wanted to make sure we wrapped up the week on this because it's like, hey, we can blaze through these charts all we want, but if we don't get this stuff down, it's all for naught. It's all for naught. So that's why over the last week or so, we've kind of been dialing it back and covering some things, right? Risk management, recovery out the drawdown, you know, swing high, swing lows, understanding just basic support and resistance, is kind of doubling back on those things. So we can move forward over the second half of the year, right? And some of us, you know, that are new, right? Even some of us that's been around for a while that are still trying to find that consistency, we can start to turn that corner. So hope this helped tonight. Ryan, Casey, anything to add before we close out the session?
No. Well, I guess I do before I say no. I was just gonna say, taking it back to the basics always works for me. So I enjoyed this session, and I hope that people got something from it. And dialing it back was right on point.
Appreciate it.
Great session, bro.
Thank you very much. Teamwork makes the dream work. And we are all, I'm not just speaking about me, Ryan, and Casey, but all of us, right? All of us are attacking these charts, showing up to make it happen. And we appreciate all of you for that. All right. So one more time, any questions before we close out? No, we're good?
No, thanks. Yeah, thank you. It was good.
Appreciate it. Well, we'll wrap it up on that. Hey, we'll be here Saturday, 7 a.m. Eastern Standard Time. We're gonna go through, talk to Ryan in case we may go through and find those swings on those higher time frames. Right? We may do it like that this week. Check some cool things out. So, all right. You know, what you think? Think that's good, Ryan, Casey?
I'm with it for sure.
Yep.
Yeah, let's take a look at it. Get people's eyes trained to it. So, all right. Have a good rest of your evening, day, or afternoon, whatever time zone you're in. And we'll see everybody back 7 a.m. Eastern Standard Time on Saturday for the Forex Weekly Ritual. Good night, everybody.
Thank